Start with the form decision. Most normal rentals go on Schedule E. You collect rent, pay repairs, maybe handle trash and basic upkeep. Schedule C is for rentals that look like an operating business, like a hotel or short-term rental with substantial guest services. And if the rental is inside a partnership or S corporation, the entity reports it on Form 8825 and it flows to you on a K-1. Here's the exam trap. Real estate professional does not automatically mean Schedule C. A real estate pro can still report rentals on Schedule E. The big change is passive versus non-passive treatment. If you're not a real estate professional, rental losses are generally passive, even if you're hands-on. That means losses may be limited and carried forward under the passive activity rules. To qualify as a real estate professional, you must meet 2 tests in the same year. First, more than half of your personal services must be in real property trades or businesses where you materially participate. Second, you must perform more than 750 hours in those real property activities. On the EA exam, they love giving you a taxpayer with a full-time non-real estate job. Usually that fails the more than half test. Even after you qualify as a real estate professional, you still need material participation for each rental activity to make that rental non-passive. No material participation means the rental stays passive. This is why the fact pattern matters. Who did the work, how many hours, and was the taxpayer actually involved in operations? Think, rep status opens the door. Material participation gets you through it. There's also an IET angle. Rental real estate income is often net investment income, which can trigger the 3.8% NIIT for higher income taxpayers. One major benefit of being a real estate professional is if you materially participate in the rental activity, that rental income generally is not subject to NIIT. On exam questions, watch for a prompt that asks about NIIT exposure, not just passive losses. Now, when do rentals jump from Schedule E to Schedule C? When you provide substantial services and it looks like a hotel. Daily maid service, linens, breakfast, regular cleaning, those are the classic hotel-like services. Short stays plus substantial services usually equals Schedule C, which also means the income can be subject to self-employment tax. Basic services like repairs and trash collection don't usually rise to that level. Last, don't confuse a real estate professional with a real estate dealer. A dealer or developer buys property primarily to sell to customers. That property is inventory, not a rental investment. Dealer income is business income, typically Schedule C for a self-employed individual, and it's subject to self-employment tax. On the EA exam, the key word is intent, held for sale to customers versus held for rent and appreciation. Marissa is an 8% limited partner in Riverton Vineyards, a partnership. She doesn't participate at all. She's only an investor. During the year, she sells her entire partnership interest to an unrelated party and stops being a partner. She has $18,000 of suspended passive losses from this activity. What happens to those suspended losses on her individual return? Think about it. She deducts the suspended losses in the year she disposes of her entire interest. That's the special release rule. A fully taxable disposition of the entire passive activity to an unrelated party frees up the suspended losses. A tempting wrong answer is that she must wait for other passive income, but that's only when she still owns the activity and hasn't fully disposed of it. A closely held corporation can qualify under the real estate professional type rule if more than what percentage of its gross receipts for the year came from real property trades or businesses in which it materially participated. The options include 50%, 90%, 40%, and 80%. Think about it. The answer is more than 50%. For this corporate rule, the threshold is a majority of gross receipts coming from real property trades or businesses where the corporation materially participated. 90% sounds believable because it feels strict, but the tested number is just over 50%.